Good afternoon, everybody. It's Friday, the week of July 4th. So we got the job number today, obviously worse than expected. Down market again. We can sort of just replay this 3 times in a row. I think that's what they were saying on CNBC, 3 to 4 times in a row. Every time we're down at least 1 to 2%. Well, we're down, and it's becoming a broken record. Obviously, the economy's not looking great from a macro point of view and from a fundamental point of view. That's not a mystery. Now, technically, what's happening? We had a decent week. Now, you could make a few arguments that overall was a light rally overall with a holiday week. I'll agree with that. But at the same time, I'm starting to see stocks really hold their bases and really make higher lows. That, to me, is giving me some confidence knowing we're coming into earnings season. With earnings season taking effect, the cream of the crop rises, and the stuff that really are just missing are going to get probably destroyed. We'll talk about Apple. Obviously, this week we talked about it ad nausea, but really the trigger was above 590. We mapped it out. Short-term target was 610. Hit it around 615. Backed off a little bit. Still holding its 8-day certainly, and I think it's going to stay up above the 600 level at least until earnings, and then if it's good earnings, it probably makes a new all-time high. That's just how Apple trades, and it's just how we have to accept and trade it accordingly. Today, 600 every time I was talking about, every time around 600, 602, I'm looking to buy it. That's not going to change. You got to stay tuned to VTF if you think if I change my opinion, but right now that is my line in the sand. The 600 should hold. Other stocks, Google had a nice rally. Shouldn't have really rallied as far as it did. It rallied right to, I believe, I guess it's past the 200-day, but 600, which was resistance, now has come back. It's not my favorite stock. I think it has earnings next week, so it's something that's going to be watched. If it a beat on earnings, certainly it's going to be up a ton. It's going to bring other internet social media stocks in that category up. So it's just to keep an eye on. Banks early in the week had a decent uptick, came right back to where they started the week from. Need more time, nothing exciting, and nothing really to talk about overall. JP Morgan has earnings next week. That's going to give a tell of what to expect. We understand what the loss was with the hedging strategy, but overall, technically, it's forming a nice little, you can either say an ascending channel or a bear flag that should work itself to the downside. We'll have to wait and see if the lows that were put in June are going to stick overall. Industry groups that are strong, you still got to look at the home builders. I don't know where to buy them. I really have not traded them that aggressively at all. This is the XHB. You can see it looks like around 2050. Ideally, that would probably be a place to buy if it does pull back. But best in breed, Len, Toll Brothers, Rylan, all at yearly highs, and they all look ready to go. Every pullback at this point since the beginning of the year has been viable. So at this point, I wouldn't be chasing them, but I would be looking for an opportunity to get involved on pullbacks, and I think that's the key to trading these type of vehicles. I know Scott likes to mention gold. I don't see a pattern in there personally, but I just think it's an avoid right now, and let the precious metal try to find its way, and it will fit itself in a nice little bottle at some point in time. You don't want to really overtrade something too often, which we all of us as traders tend to do, but that's the key. Other tech stocks that I think look good and I think on pullbacks are buyable. Amazon against 220, I think is still buyable. I'm sorry, guys. Another play that I think is okay from that point of view, Priceline. Obviously, I went from 650 this week back to almost 700, and then really almost retested to 650, 665. It should make a higher low from early this week. That will be from the 630 range. So around 650 to 665, I'm going to be looking to buy it. That's my mantra at this point in time. 1-2 days selling. We got to get this overbought reading off the books. Look to get him back involved. That could happen Monday, could happen Tuesday. I think this week you'll get that opportunity to scoop up some more nice prices in a lot of the high beta stocks, best in breed opportunities. Oil, commodities, same. Little bit of a, decent uptick from the bottom, but technically not showing a whole lot of, strength, except that, the OIHD ETF has regained its 21 and 8-day moving average, which is significant. Go across the board. Exxon looks like best in breed. Chevron looks decent from a technical point of view. Schlumberger, now it's over. It's 8 and 21, which technically is decent. 200-day is 71.09. Overall, guys, you got to put things in perspective and understand we just ran a decent chunk in the last, 5 to 7 trading days from Thursday's close last Thursday to now, till the previous Thursday was a decent travel range for the S&Ps. This pullback is normal. Obviously, I understand, technically and macro, fundamentally, it's not a good sign, but I'm still seeing a lot of good-looking charts. On the negative side, I see some industry groups that I'm a little concerned about, and that is the clouds. FFIV, which were starting to look like they were recovering a little bit, but then INFA came out with earnings, and I guess APKT did something also. Both, below expectations. But APKT, in my opinion, was never a market leader and hasn't been for a while. But the CTXSs, the CRMs, and the FFIV and the VMWs, I would put them in the same category. I do not like how they, are trading at the lower end of the trading range, all of them. Maybe take away CTXS, which seems to be best in breed. But we'll have to see if they recover. It's an industry group to watch. Right now, it's a negative. On rallies, it's probably shortable, but we'll have to wait and see how they play out. And I'm still going back to, some of these stocks that, some of the biotech stocks that, everybody wants to short this PCYC, yet here's the chart. Every time it looks like it's getting a little bit farther away from its 8 and 21-day moving average, it rests for 4 or 5 days. Be careful with this one. It will tell you when it's ready to be shorted. Right now, it looks like it's screaming good long from a technical point of view. Along that front, I think ALXN, some of these other biotechs look pretty good. Arna had a decent move this week. Nothing great coming out of a base. INSEE, another one that looks pretty good. So you have some biotechs that are pretty interesting, and I think you got to do your work on them at this point in time. Because, again, they come out with drug trials, they come out with FDA, or a meeting with the FDA. You have to know and be prepared with what is in front of you with that being the case. So right now with the S&Ps, I thought we were going to hold. I said around 134.85. That's the gap we should have held. We did. That is decent. But obviously with this down day, we're going to have to work ourselves back on the long side, at least temporarily for the next few days. We'll have to see what Monday brings in. Obviously, everybody's back to work. Is that going to put volume back in the market? Are people going to, more selling coming on Monday? Or is it just going to be a new buying opportunity and the best in breed will continue to shine? That's where we're at. Don't overlook it. Find your stocks, find your mojo that really works for you. I have been jumping a little bit more into individual plays. I would say the play of the week that we talked about was either Apple or Netflix. And, Netflix we mentioned to nausea. I like when I see stocks that are heavily shorted on the street, big short positions, and all of a sudden they start looking like they're ready to go after, months of just backward and sideways action. And you can see it recovered from regained its 8 and 21-day moving average. The trigger to get a little bit more aggressive was 70.50. We talked about it on the blog. We talked about it in a VTF. And my short-term target was 80. But it obviously went a little bit farther than that this morning, back to 80, almost 85. Now it needs to digest a little bit, a little more back in filling. It's back in play, which is what you like to see. Along that front, look for other stocks that are giving you these short squeeze type of positions that are ready to set up. I was talking about GMCR. Same type of idea. The 8 and 21 day are beginning to cross. Technically, it's a good sign. And it's giving you a little bit of a short squeeze. Obviously, I don't think they're going to last for any sort of period of time. But it's a nice trade, and it's a nice opportunity for us to get involved and really make some cash flow across the board. So hopefully you had a good week this week. If you were here, you're obviously a trooper. And, you avoid, I guess, the 100-degree weather that is happening on the East Coast. But overall, for the people that were here, it was a decent week, decent stocks, nice follow-through. And hopefully we continue to see that across the board. The overbought reading is almost, probably one more day and we're back to the flat line, which is what I want to see. Overall, best in breed stocks, I'll put LinkedIn in that category. They look good. We're going to have to wait to earnings, though, overall. Have a good night, everybody. I'll see you back on Monday.